Hello and good evening, everyone. Welcome to this new video of Investing Fool. Uh, Today, I am going to discuss about. We're going to discuss the portfolio also and a bit about the upcoming rebalancing. But today, primarily, I want to discuss exits and the way we exit stocks. These are just some thoughts that I'm considering right now. I haven't formulated any strategy or there is nothing very systematic about it, but just some thoughts that I wanted to share about exits. So, before we go forward, just go through the disclaimer. You can pause the video and go through the disclaimer. Please understand that nothing that we discuss on this channel is a recommendation or anything. But let's get straight to the topic. So, why am I discussing exits, right? So, often if you look at the social media or you look at the entire YouTube content around stocks also, nowadays it's not as much, but when the market is in strength, then often the focus is too much centered around entries, right? What to buy or when to buy. 80% of the focus goes on these two questions probably. What to buy, when to buy, कौन सा stock लेना है, कौन सा stock लेना है, right? और ना बताओ. It's like when we are going to a store to buy clothes, right? And you're not satisfied with anything, probably nothing is working on your portfolio and you are always looking for new names. Where can I invest, which will become probably a multi-bagger or whatever. So there is just too much focus on entry. For entries, obviously, every investor who has a system of getting into stocks, they would have some sort of screening, right? कुछ एक हद का स्क्रीनिंग होता है, उसके बाद ही पीपल ईदर वैल्यू इन्वेस्टर्स दे वुड प्रोबेबली अप्लाई सम एडिशनल गार्ड रेल्स, but they would have some initial screening, right? Everyone would have some initial screening. Uske baad, like based on your proclivity, you decide which way you want to go or how you want to get into those stocks and those individual stocks. But half the job is done now, right? If you have screened correctly as per your system, like if you're a momentum investor, if you have ranked your stocks, right? So the initial screening that comes, that obviously has will have most stocks that are all the stocks which are meeting certain criteria, right? So आधा job तो वहीं पे हो गया. Now you have entered those stocks. So the equally important part is when to sell those stocks or when to not sell those stocks, right? How to ride trends. Those are very important things in the stock market. The overarching principle is to ride big trends, right? If you are unable to ride big trends, and this is not just a momentum investing phenomenon, right? People who can ride big trends, they can make a lot of money because you are not churning them out, right? You're just it's like an engine that's continued to work for you for years, right? And if that happens, a lot of gains can come to your portfolio. And that is why it is very important to understand or to think about exits or how you are exiting the stocks. So once you enter, half your job is done, but you have to think about exits. And when I'm thinking about exits, one thing that comes across frequently to me is I feel really bad if and this happens very frequently. आप सबके साथ होता होगा कि whenever you whenever you get into a stock, either it starts falling after that, or whenever you exit a stock, it starts rising after that. This is a very very common phenomenon, and we obviously we are very biased in consistently seeing the stocks that we have recently bought or exited, right? हम उसी को देखते रहते हैं कि मेरा क्या हो रहा है. So specifically when you exit a stock and like in the momentum strategy, you would have exited the stock because it has fallen, right? In the the price action has been negative in the very recent past, and that's why you are exiting the stock. Or relatively it's much poorer than the others, right? But when you exit the stock and then it starts going up, then you have something that I call the seller's remorse. Most of you would be aware of what buyer's remorse is. So this is kind of a seller's remorse when you are thinking कि क्यों बेच दिया, right? Maybe I could have held on for a little bit more time. And in general, stocks can go three ways. So after an exit also, stocks can go three ways, right? If they can either continue to dive. You can see some of the stocks in our exit list. And by the way, I haven't brought to this point, but whoever is watching this video for the first time, we have been following this momentum portfolio of the Nifty 500 basket of stocks for a long time now. Not really a long time in terms of market cycles, but from the around the end of 2023. And you can go check out this portfolio, which stocks are there in the portfolio, when we have bought and exited stocks, all of that. We do rebalancing every couple of weeks. You can check that in the description of any of our videos. So if that, and you go to the exits page, right? If you go to the exits page, you will see a lot of stocks. If you look at the trajectory of the stocks that we have exited, let's say 6 months ago, 1 year ago, many of the stocks have fallen much further from there, right? So in that case, you are very happy कि चलो भाई बच गए, सही टाइम पे निकल गए. Even if you sold, like let's say a stock went up till it gave you 200% gains, right? Then it came down, so now you are like probably at 150% gains or something, and then you exit the stock. So obviously you would feel a little bit bad कि like I had a gain of 200%, but now I'm selling out only at 150%, right? So बुरा तो लगता है, but if that stock falls another 50%, then you are very happy कि भाई बच गए. So that is the first scenario, that a stock after an exit, especially a momentum stock I'm talking about here, after an exit can continue to fall, in which case you are very happy. Or it can stay flat. It won't go anywhere, not do anything for months, maybe years, and then you feel then also you feel okay, right? You feel good actually, because पैसा फंसा नहीं हुआ है वहाँ पे. If so there is no loss of opportunity cost in that sense, right? If your money is deployed somewhere and it's not doing anything for 1 year, your money is just not doing anything, right? It's just lying there. uh, and the worst case, like when you have exited the stock, so these two exits you are happy with, either stock और ज़्यादा गिर रहा है या कहीं नहीं जा रहा, right? Both these situations you are happy. अगर गलती से stock recover कर गया, then you start having thoughts ki why did I sell at that point, could I have held on, and because the stock may not be relatively well performing enough after it has recovered a bit कि वो फटाक से like it won't be in the top ranking, so it may not re-enter your portfolio. It may re-enter your portfolio after it has again grown by like a lot of time, and like a lot of margin, I'm saying. Let me just illustrate this with an example. This has happened to me like a lot of times. So all these stocks are for illustrations, but if you see the first chart here, right? I exited this stock somewhere around May. This is DOMS, and it has done nothing after that. Right? It has just gone, it is there or thereabouts. A very opposite stock which gave me a seller's remorse a lot of times is Bombay Stock Exchange. So Bombay Stock Exchange, when it fell here, it met our exit criteria. So just to brief you about the exit criteria, what we do is typically in any rotational momentum strategy, you would have like a lot of ways to enter and exit your stocks, but we are talking about exits here in this video. So let's say you define a universe first. It's either like the Nifty 200 or Nifty 500 or Nifty total market, and then you get in, you select X number of stocks, let's say 20, 30, 40, whatever, and then there can be many exit signals that you can create. Like let's say if any stock falls below its 200 DMA or whatever DMA, then you exit the stock. If any stock falls X% from its all-time high, then you exit the stock. If any stock falls, if the rank of any stock falls below X in the next ranking, which is what we use, then you can exit the stock. So there can be multitudes of such signals. What we use here is when we rank these stocks, if anything, we like currently have 22 stocks in the portfolio, and we aim it to take it to 25. But we have a worst rank held criterion of 50. So if any stock in the next ranking, whenever I'm going for the next rebalancing, if I'm doing the ranking and the stock rank comes beyond 50, then the stock gets removed from the portfolio, right? What the problem with this is, a lot of times these stocks will go to 54, 60, 70, whatever, and then but then they can quickly bounce back also. They can quickly bounce back but they won't come in the top like 10, 15 ranks. They would be again, they would be inside, they would come inside the worst rank held territory, but they would not go to the top of the charts, right? So maybe they're like at 40, 35 or whatever, and then they again start growing, and then they reach the top again. Now when they reach the top again, there is a chance that they will re-enter your portfolio, right? तो तुमको वापस खरीदना पड़ेगा वो stock. So, and you would have sold it much lower than you are buying it, and again what happens if that stock starts falling again? So this has happened to me in BSE a lot of times. BSE was in the original portfolio also, like when I had created this at the end of 2023. BSE was there in the very original portfolio also. It got, like, I have entered and exited this stock probably 4 times or whatever. In 2025, if I look at what BSE has done, so this time, so this here it met the worst rank held criterion. So the momentum was just flat for some time, and we exited the stock. It again went up, and when it went up, it didn't come into the top rankings around here. It came into the top rankings somewhere maybe around here, right? And after we bought it, the gains, the gains kept coming, and I was happy कि भाई बढ़िया चल रहा है. Again, it started showing some downfall, and we would have exited somewhere around this mark. You can check on the exit sheet, but right after we exited, so this time by this time I had already like exited BSE 3 times, and every time what would happen is, like, it would go down, I would exit, it would come back up in the ranking, I would have to buy it again. And you can either take a conscious choice कि भाई एक बार मैंने exit किया है तो I won't get into the stock for 6 months or 1 year. I don't know how much that helps, but that is probably one mental thing that you can create for yourself, just to probably not have that remorse. But I had that remorse repeatedly, right? I would exit the stock, it would come back up, I would have to buy it again, it would again fall. So maybe it's in the nature of some of the stocks, they have this kind of variability that they could easily fall like maybe 25% or something every few months, right? And still they come back up every time. So this time what I did, I didn't liquidate my entire position in BSE. इस बार भी exit signal आया, I exited most of it, but I sort of waited, and when if you see here, after October, BSE again started rising. So when that happened, I gradually tactically rebuilt my positions again. Now it can very well happen, you can see that it's very close to its all-time high now. Now it can very well happen that it turns from here, right, and all my hypothesis is gone. But because I've seen this 3 times, I have a little bit more conviction in holding on to it for some more time. Again, this is not part of the momentum strategy. This is a completely different thing. This is not systematic. This is discretionary, fully discretionary. It can go wrong in hundreds of ways. I don't know. But this is just something that I'm currently experimenting with. I'm not sure if how many of you have felt the same कि stock निकलने के बाद it goes up, and just note this, that this won't happen with a lot of stocks, right? If I take on average, mostly the stocks that we have exited, it's good that we exited. Stocks typically don't come back so much as this stock has done, right? And all these are for illustration. Obviously, I have no interest in you going or buying or selling anything. These are just my observations. So if I talk about what are the objectives of monitoring sort of these exits or trying to reduce the exits, first is that I want to reduce the churn. So no one wants to have a lot of churn in the portfolio. As DIY investors, we are anyway cursed, right? We have to pay STCG for most of the trades that are done in a typical momentum portfolio. In a typical DIY momentum portfolio, it is very tax inefficient, and that's why I have a part of my holdings in passive momentum ETFs and mutual funds also. You just cannot beat the tax efficiency of mutual funds. There is just no way around it. Like, one of the simplest things that you can do is buy 70% of a broad-based passive mutual fund, right, and maybe 30% gold, or 50% momentum, 30% gold, 20% debt, something like that. very vanilla plain asset allocation will work wonders in the long term, right? You don't have to, and obviously you can say that these passive ETFs, they have longer rebalancing periods, they may not have much of downside protection during drawdowns, kyunki like they don't take cash calls and all. But that is why you are having some fixed allocation, a significant allocation to like non-correlated assets, right? So you are countering that by asset allocation, but you don't have to pay capital gains tax ever, right? The transaction costs, like everything is of course there in the expense ratio, but the mutual funds do not have to pay capital gains DIY retail investors would have to do. So that tax efficiency is just very hard to beat. So that's one point, right? So reducing churn and reducing the costs, the transaction costs and the taxes associated with so much churn, that is one point. But the more important point is avoiding premature exits in a long term trend, right? If something is going from 2000 to let's say 8000, right, it can 4x, then I am getting an exit every time at, let's say, it falls from 3000 to again 2500, or it falls from 4500 to 3600 or whatever, right? These stocks, they keep falling and then they start continuing their journey, and the rational way obviously is to say that हाँ ठीक है, मतलब what can we do about it? This is a part and parcel of the strategy, and I completely understand that. But I'm just experimenting in terms of some stocks in which I may have the historical context कि this stock has shown this kind of behavior in the past also, and that is why I'm not very sure that whether this is the right time to exit or not. A stock like that, if it has shown that kind of behavior, you might be very well enticed कि if the rank goes to 52 or 53, then you are like कि नहीं इस बार छोड़, मतलब रहने देते हैं, let's say I don't exit it, I monitor it for some time, and let's see where it goes, right? Won't work all the time obviously. I also haven't done this. I have never done this कि exit ही नहीं करना है. I would be more in the camp of liquidate most of it, but maybe have some for in a monitoring sense, right? So there are two ways that I think, or I have thought about till now, of kind of not exiting some stocks based on the regular exit signal. The regular exit signal कि 50 के ऊपर rank हुआ, then you get out. There are two ways of counting that. Either you loosen your exit criteria itself. Let's say I have my worst rank held at 50, I increase that to 75, so then the stocks get a lot more leg room कि 75 तक भी rank जा रहा है, then also they are not exiting your portfolio. So either you loosen your general exit criteria, but the problem with that is that it will impact the entire strategy. So all the stocks, right, they will have much more room to lose, and you will probably realize much more capital losses, right? Like in the example that I said कि कोई stock 200% तक गया and then you lost a lot of bit, so you are now down at 150%. If you let it run to a worst rank held of 75, maybe you won't even have that 150%, maybe you will have like 120%, who knows, right? Because rebalancing is also not happening every day. You are doing it every week or every couple of weeks or every month once, right? If it falls too much within that, then again it's gone. So loosening the criteria for the entire strategy will impact all the stocks. There is a very high probability that a lot more losses will be realized this way. The other way that I'm thinking currently is you exit the stocks, but you monitor all of your past exits. So whatever momentum exits you have had in the past year, let's say, keep monitoring those stocks. Most of those stocks will consolidate or will not come back in the ranking, or will continue to go down, and that's fine. Like most of the stocks, your exit signal has worked perfectly. In some of the stocks, either they have shown that behavior in the past, or like I mean, I can't describe it systematically because again this is, I'm very specifically mentioning, this is a very discretionary, very tactical kind of a thing. But whether when you get the sense, you define certain conditions, like let's say it closes above this, right? And I'm yet to define those conditions, I'm just throwing out ideas currently. But if it goes back, you exit, you liquidate most of your positions, you maybe keep some for monitoring. Once it if it never reaches that point, then you're fine, you liquidate and you be very sure कि अच्छा exit किया. If they come back, if they start satisfying some conditions of a turnaround, that's when you again start adding your positions back in and gradually increase it. Again, this will not be part of your core momentum portfolio until the day when the stock has given so much, like let's say BSE goes to an all-time high now and then keeps growing, so obviously it will come in the top rankings, right? Then like I can have that entire position as part of the regular momentum portfolio also, but until then it will just be a sort of a tactical monitoring side mein rakha hua portfolio, which you are just thinking to either confirm or nullify your hypothesis. If the stock turns again, like there will be still be churn and losses in this one also, क्योंकि every time a rebound happens, you would obviously want to get in a little bit early, so you would start building your positions. It may well fizzle out, right? The stock may again turn and go back downwards. So again, इस case में you would have earlier you would have gotten just one clean exit. Either you exited messily, you tried to re-enter, again your hypothesis basically got rejected, and you are again having to exit. So added churn, added loss, maybe nahi, definitely some opportunity cost, because that money would have gotten deployed anywhere else. And so there are like risks both ways. There is no, like in investing and in life, there is no clear cut answer that you have to do this or you have to do that, but these are just some thoughts. And one last point is the I'm not a fan of narrow exit criteria. Like a lot of times you would see ki, so one of the entry criteria that we have in our portfolio is 25%. The stocks should be within 25% of the all-time high, right? So this is an entry criteria, but it becomes a de facto exit criteria because whenever a stock is not within 25% of its all-time high, then it does not get considered in the next ranking. So if something does not get considered in the next ranking itself, so it won't appear in the list, right? And obviously you would have to exit that stock. So some, like I get questions also ki why do you allow like stocks to fall so much, right? And the answer is because I can't deal with a lot of churn, right? If I start liquidating my positions at a 10% or a 15% fall, momentum stocks vary a lot, right? Typically these are high beta stocks which go up and down a lot, so you have to have a significant legroom for them to like play out as they want to. And here I'm talking about even more, right? People who are loosening their exit criteria to reduce churn, they are talking of even more legroom for some of the stocks. So narrow exit criteria I'm really not a fan of. They're very short term focused, like कि कुछ गेन हो गया गेम बचा लेते हैं भाई. You can't think like this. If you're a long term investor, you can't think कि थोड़ा सा गेन आ गया उसको बचा लेते हैं, उसको लॉक इन कर लेते हैं. The entire focus about narrow exit criteria, and this applies most to traders, which is good, but I don't want to apply this to investing. If you're a trader, you definitely need a lot of like very narrow exit criteria probably, and you want to cut short your losses very quickly. In investing, because you're investing for a longer term, you have a little bit more legroom, so you don't like unnecessarily want to have a lot of churn in your portfolio. So don't be very focused on the short term कि थोड़ा सा गेन आ गया है तो उसको लॉक इन कर लेते हैं, निकल जाते हैं स्टॉक से. डोंट बी सो ईगर टू गेट आउट ऑफ स्टॉक्स. You would make money, and like I am not making money in any way. You can see my portfolio. The last year has been a complete wash. But I'm just saying this in general that if you want to make money, you have to ride trends for long, which means just staying put. I'm not advocating a buy and hold here, right? This takes constant monitoring. Buy and hold, buy and forget नहीं है कि एक बार खरीद लिया और फिर भूल गए 10 साल तक. I'm not saying that. What I'm saying is you have to keep monitoring it constantly, that it is growing, but you will try to lengthen that ride as much as possible, right? And not prematurely exit. I do not want to prematurely exit. That's the first and probably the only reason why I'm looking at this. Just note that I'm not making any change in my strategy for this. Whatever I'm doing or tactically is just something on the side, right? It's not impacting my strategy in any way for now. Now let's talk about the portfolio. A lot I've talked about exits, but let's talk maybe a couple of minutes about the portfolio. So what has happened in the portfolio? Nothing has happened. Obviously, portfolio is still in a drawdown. Last time we talked, it was around 21% drawdown. Now it is close to, I think, 23% drawdown. Some days, like some stocks run up in the portfolio, and you feel like you are like performing better than the market. Other times, the broader markets are doing so well, but and this is the more frequent thing, that the broader markets are doing very well and portfolio तुम्हारा कहीं नहीं जा रहा है, and you are just stuck thinking कि like what am I even doing, right? That point of like questioning yourself, maybe questioning your strategy, comes to everyone. It's fine, but you should just stay put. There is just no other way. You have to see yourself through these market cycles, because that only will give you confidence in handling your strategy when the better times come, and they definitely will come. Financial services as a sector is now half of the portfolio. So I've seen two pie charts here on the right hand side. If you see, this was I think a few months ago. So you can see financial services was 22% here. Now this has doubled. So financial services is now 45%, and we are going to do the rebalancing because 15th of November has passed, and tomorrow we are again going to do the rebalancing. 3 stocks will be changed and 3 new stocks will come. Of those 3, also 2 are financial services only. So financial services, specifically banks, a lot of public sector banks, they are showing good momentum. And in all momentum portfolios, you would see they are like their share has been increasing over the past few months. So now it is like with this rebalancing, I think it will be more than half of the portfolio. And that's the first time that a sector has actually crossed 50% of the portfolio. So I hope that this is like not a very short term trend. I hope that this trend materializes substantially and keeps growing in the future also. And as I said, 3 stocks will be changed tomorrow. I'll update that either by tomorrow night, and I'll share a post on the channel also. In terms of the indices are doing good. All time high के आसपास हैं सब, and everyone is happy. Not everyone is happy actually. Index investors are happy, but if you look at individual portfolios, the stocks would have. The stocks are still in a lot of pain. So the indices are in a way hiding the pain of individual portfolios. If you look at individual portfolios, the drawdowns are much more than the index. And that's kind of expected with the way with the run we have had in the past year. This total year has been a full wash. Gold continues to go up. So after the recent fall, many people might have thought ki okay, let's sell positions. Gold might go much down from here, and many people would have bought also. But it seems like the long term rally is intact. And specifically with the dollar devaluation discussions that are going on across the world, right? Hard assets like gold, it's very difficult to imagine that they will go down a lot from here. Like on the contrary, indications are that like in the next 5 years, like the gold should be much higher than where it is now. So that is something that you need to consider. Bitcoin has had a lot of fall recently. If the rate cut comes from the US Fed, it bodes well for gold prices in general. Much of that may have been priced in already. In terms of India, the Bihar elections are done, and this is I heard an interview in which like some sources had said that the terms of the Indo-US trade deal had been finalized, but there were some agri-sector concessions that were given, which probably the government didn't want to disclose before the Bihar election. So now that the results are out, it hopefully is a short run from here till the time when the Indo-US trade deal is ratified, and with the kind of decent, I would say, GDP growth, at least in the nominal sense, and earnings growth that are coming, everyone is like, one thing is for sure, that the markets are not ready to go down, right? But they are not ready to go up as well, right? So everyone is in a way in the same camp, convinced that the market is not going out, but probably some have a lot of cash to be deployed, and some may have already deployed a lot of it. but everyone is in the same camp. They want the markets to go up, and we have had a year like this after some time, and we just hope for a better 2026 now. Nothing else can be done about it. So yeah, that's pretty much it that I wanted to talk about. I'll do the rebalancing tomorrow. I'll update the portfolio by tomorrow night, or maybe the next day morning, if I'm held up tomorrow, and I'll share a post on the channel. But more importantly, what I wanted to talk about was exits in this video. And what are your thoughts on this? Have you faced this problem when you feel like exits are just not working the way they should be, or you are cutting your gains too quickly, you are not able to ride the long term trends? And what approaches are you thinking of to sort of minimize this, or to monitor this, or how to ride the big trends? Like, because big trends are not this fetish of making money quickly, 1 month, 2 months. There is a crazy uh, I mean, one stock goes up too high and you sell it at the top and get up. These are all just uh, like these things are not what makes probably a very big portfolio, right? If you have to do that, you have to ride relatively longer term trends. So what are your thoughts around riding longer term trends? What factors are you considering? If you're a momentum investor, then please let me know in the comments below. Again, thanks for watching. It has been a long video. Thanks for watching, and I'll see you in the next video. Thank you.